Welcome to Dear Simpler. This is the segment within Simpler Foundation in which we answer questions that our traders really want to know. What is the question that I got today? Well, this is a very, very common question, and it's very critical as far as trading goes. Our trader says, Dear Simpler, what process do you use to generally gauge the market as a whole? This goes into the whole tide boat analogy. I find myself opening up trades on good setups right before the tide pulls back, but also missing opportunities waiting for the tide to be in a buy zone. How can I improve on this concept? So I wanted to answer this question today because this is very, very critical as far as being a successful trader. Really understanding how the markets work and understanding that there is a tide, there are boats, and what you want to do is you want your boat and your tide to be going in the same direction. If your boat and your tide are not in confluence, this is really where you have problems trading. So the first thing that you need to do if you're finding that your tide and your boats are not running together is you need to start with the analysis of the indexes. That is the first thing that you should always do before you put on any trades. If you're having problems entering long trades right before the tide turns, it's probably because you're focusing on an individual stock instead of the broader market as a whole. So ask yourself, number one, have I done a thorough analysis of the bigger picture chart on the indexes and sectors that could affect my stock? If you're only trading a stock and you're ignoring the larger overall tide, this is a big issue. Number two, am I aware of which sector or index may affect my individual chart? This is very, very key and critical, and I find it's a huge problem with traders. Traders just aren't really aware of what sector or index their stock falls into, and they don't understand how the movement in the index will affect the movement in the stock. Number three, is the tide just starting to move along with the stock, or has the tide already ran its course and the stock is left behind? Let's break down these examples, and I'm going to give you a couple examples of when the tide is moving with a stock and when it's not. So, number one, how do you go about analyzing a sector or an index? I follow this formula. As a strict technical analyst, I always check my weekly and my daily charts. If you're looking at a weekly and a daily chart, that'll give you a pretty good big picture idea as to what these sectors are doing on that time frame. When I'm looking at, for example, a weekly or a daily chart of the S&P futures, then I check number one, my Fibonacci analysis. Where are my major extensions or clusters? If the overall index is trading near extensions, that means that the tide is most likely at an area where it's going to turn. However, if it's trading near a cluster, an area of support or resistance, that is going to tell you when your tide is going to start or when you have a good entry point to get into a trade within that sector or within that stock. So that's the very, very first thing. Always running Fib analysis on a primary daily or weekly chart. The second thing that you can do, especially if you say to me, well, Danielle, I don't know how to run Fib analysis, what can I do? Well, first of all, I do highly recommend everyone who wants to pick their own setups learn how to run Fib analysis. But in the meantime, what you can do is, number one, you can use ours. We always are giving examples of that. But number two, you can just use your main moving averages. These are on every platform, they're free, and you can learn how to use them. The moving averages that I like to use are the 8, the 21, and the 34 EMA. So you look at your chart, look at the NASDAQ futures, look at the S&P futures on a daily chart, and you say, where is price? Is it close to the mean? This is the mean. If it's not close to the mean, then it's probably going to return back to the mean pretty, within a short time frame. If it's close to the mean, that could mean that it's a good buying spot. Where is price in relation to these key technical levels? So I think that I already covered that, but really, you want your fib analysis, you want to look at your moving averages, and then the key part here is where is price in relation to these levels. And that's when you're going to know if the tide is going to turn or if it's not going to turn. So the concept here is, I look at this guy standing up at the top of the mountain. Just like humans can't run uphill forever, neither can stocks. They're always going to revert to the mean. So you must learn to identify A, where they're most likely to run out of steam, and B, where the mean is. So here's an example of an actual chart. This is an instance where the tide is much more likely to turn rather than keep going up. Could it keep going up? Yeah, it absolutely could. It could edge a little bit higher. So we're looking at the price action right here. It could edge a little bit higher, but how do we know in this instance that the tide may start to turn and pull back, and it might not be the best time to add a bunch of long trades on in the S&Ps? Well, because you have your fib extension. Here's your last swing, your high to your low, and here's the most recent rally. And you can see that price is right up on top of your 1272 extension. We always say that moves tend to terminate at extensions of prior swings. The first area is the 1272. The secondary target is the 1618. It's less probable, but it is the secondary target. So for me, when I'm getting up to my 1272, that tells me to have caution. If you look back at these past swings, you can see that, I don't have it measured on here, but they don't keep going up forever. It ebbs and flows. Comes up to a 1272, pulls back to the mean. Up to a 1272, pulls back to the mean. Up to a 1272, and it's almost ready to pull back to the mean. How do you improve on this? Well, to get better at analyzing the tide, like I said before, I would focus on Fibonacci extensions, your moving averages, and then awareness of what positions you have that may be affected by the downturn in the S&Ps. Hint, that's going to be about 85% of them. Yes, there are going to be honey badgers that do not move with the overall S&Ps. However, most stocks will move with their tide. So let's talk about which tide affects which boat. The other key part of understanding this is which tide affects which boat, okay? How is the NASDAQ related to Microsoft? How is Boeing related to the Dow? Well, this is where you can do your research. There are a lot of free websites that can give you this information. I really like CNBC.com or also SectorSpider.com. Go ahead and go through those sites and you can search, hey, what are the top weighted components in the NASDAQ? And that'll give you a clue. If you notice the NASDAQ is moving, some of your top weighted products in there are most likely moving too. Is your tide in alignment with your boat? Example, if you find a long squeeze on Microsoft and you say, hey, Danielle, I really like this daily squeeze on Microsoft. Is it a good time to buy it? Well, make sure you check out the NASDAQ and XLK, which is the technology sector. If the NASDAQ is already at extensions and so is XLK, do you think it's a good time to buy Microsoft? Probably not, because the tide may be about to turn. So let's look at an example of SectorSpider.com. If your analysis is telling you that the crude or energy markets may move, where should you turn to trade this? Look for your boats. Well, first of all, you can always just trade, the overall energy. You can trade crude, you can trade XLE via this ETF. Or you can say, okay, I think that energy is moving higher, so what kind of boats could I trade? Well, let's look at the top weighted products. You have XOM and CVX. You can see that they have a very high index weight within XLE. So from that, I would then go to these individual charts and see if there's a setup that will go with my overall tide. So here's another example. Microsoft has been a great long this month. However, both the tide and the boat are extended and can be expected to revert to the mean. How do we know this? Well, We're up above a 1618 extension on this Microsoft's chart. That is a very good move, and it's also not very probable. Most likely it will stop here or here, and my next target on Microsoft is 113, but the 2618 extension, I mean, that would be an amazing feat. So I am looking for a reversion there. As far as the NASDAQ goes, same thing. We have our 1272 extension right there. So I'm expecting that to pull back to the mean. What is the idea in trading? Well, the idea is that you want to go with and not against the tide. In the market, nothing is perfect, but you can learn how to recognize the best situations. Those are really where we can put our money at play. What are the best of the best? This is going to be when your tide and boat are both in a favorable buy point. This means they are most likely on a Fibonacci area of support. They're not extended, and they have complementary buy setups that tell you both will move in the direction you want. Swimming with the tide is so much easier than going against it. If you can master this concept, your trading will be so much easier going forward. Here's an example of a trade that I did in Home Depot. Home Depot is one of the top weighted products within the consumer discretionary sector within the S&Ps. I noticed that there was a really nice pullback, some Fibonacci symmetry right here at the same time that we had a very nice pullback in Home Depot. And this is our tide and this is our boat. I could have traded both of them, and you absolutely can. I chose to trade Home Depot. I bought it down here near the 34 EMA at the mean, and I sold it right at the 1272 extension. Here's my entry, here's my exit, here's my tide, and here's my boat. These are the type of trades I like to do on the regular. In this example, my trade price was $575, so it cost me $575 for one contract, and I ended up selling that for $940. You can see that right here, and I just wanted to give a very simple example of how to catch the tide and the boat and why this is so important. Thank you for joining me for this segment of Dear Simpler. If you're interested in learning more about trading, come join us at simplertrading.com. We're about to launch our new service called Simpler Foundation, where we're focusing on helping traders build their foundation from the ground up. Just like anything else in life, in trading, you need to have those building blocks if you want to succeed. That's what we're going to give you. Come check it out.